Talk to me about the Fed. What is the main concern that the Fed now needs to watch out for? I guess it's, communicating to the market that they won't rise interest rates too quickly.
I think that's right. The Fed has said that it wants to raise in a very measured fashion, and it's laid out in its dot plots the path that it thinks it will do. But the key is going to be what actually happens with inflation. If inflation stays very modest, then the Fed may not be able to raise as quickly as it currently expects. Alternatively, if we get a burst of inflation, 2.5% to 3%, then the Fed may be forced to tighten a little faster than it currently thinks.
Where do you expect inflation to be? And again, why has inflation, not exactly been correlated with, for example, the strength of the labor market?
Well, inflation has been very modest. It's come up some, and with the Fed's preferred inflation target, the PCE price index, we're about at 2% now. If the labor market continues to tighten, as we think it will, and I think by the end of the year we'll see unemployment probably down to 3.5%, we'll see wage gains that are stronger. And with the low productivity environment, that should translate into faster price gains. So I think by the end of the year, we will be sustainably above the 2% Fed target, not much above it, perhaps as much as 2.5%, but above 2%.
David Berson, good morning from New York. Let me give you the dumb Monday question. Is inflation the same in Cleveland as it is in New York or it is in Denver?
Inflation is different everywhere, and it's different for every person. When the Bureau of Labor Statistics does its consumer price index, it's a market basket of goods and services that most people buy, but not everybody buys them. Some people buy different things. They buy things in different quantities. So when we look at inflation, it's an average over the country. It's an average over each person, but each person experiences inflation differently, Tom.